options risky? And why do so many people say options are risky? Hello, my name is Vincent Dowd. I'm one of the lead trainers for the Market Mastery Group. This is a question we get a lot. Number one, people that are new or that have heard about options, or maybe even that have traded them, say options are risky. And number two, why is it that people say options are risky, and are they risky? Well, let's dive into this. First of all, I heard the same thing back in my 20s, that options are risky, I shouldn't trade options. But again, I had to look at the source of who was saying that to me. And usually it was people like my mom who didn't know anything about options or finance, friends of friends, and just people, or people who have went out and without education, invested in options and lost a lot of money, and they're wounded and they tell everybody options are risky. What they did essentially is go gamble their money away, and now they're blaming the option, not the lack of education. So let me just stop you right here and say this. Everything contains risk. Getting out of bed in the morning contains risk. The key is you've got to understand how to mitigate risk. Options actually were created specifically to limit risk. So right away when somebody says options are risky, that tells me they don't know what they're talking about. They have not studied options, used options, nor do they know the strategies that you can use to mitigate risk. So think it through. If you bought a house, there's risk in the house. If there's a fire or a flood, you will lose tremendous money unless you have insurance. Now, if you have insurance, you're paying a premium, right? And that premium does nothing for you other than give you peace of mind that if the house burns down, you'll get a check from the insurance company. But otherwise, it's not doing anything for you month after month. But you're paying premium hoping that your house doesn't burn down. If it does, then you can offset it with the check from the insurance company. So puts were created the same way, options were created the same way. If I buy a stock for $50 and I'm nervous that the stock market's going to go down, but I still want to keep my stock, I could go buy a put. If the stock goes down, the put goes up in value, offsetting the loss. Now, you don't need to know why on this right now. The key is just to understand when the stock goes down, it offsets the loss so you can sleep at night knowing if the market crashes, the insurance covers you and you're not losing that much money. Now, what happened is some people called speculators said, wow, we can make money if the market goes down and I don't even have to own the stock. All I have to do is go buy the put, and I limit my risk because when I enter the trade, I'm only using a leveraged amount of money, right? So let's say the stock's at 50 and I buy a $50 put for $2. Now, remember, one contract controls 100 shares of stock. So that $2 is per share. So that would be one contract would be 100 shares times 2 or $200. So that's my total risk, $200 if I'm guessing the stock's going to go down. If I've done my research and I have a pretty good indication it's going down, I could risk $200. If the stock does drop, then my option goes up in value and I can sell it anytime and make money, right? Now that's just one way to use it. It's called directional trading. If the stock goes down, you make money with the put. If you buy a call and the stock goes up, you make money with the call, right? But what's really powerful is when you learn to use options like the professionals do. So when we use options, what we're doing is we're learning how to use the options in combination. You can use multiple puts, multiple calls, or use them together to form different types of probability trades. Imagine this. You put on a trade and you think the market is going to go up. And when you put this trade on, you're paid right away. So you make money. Let's say you make $1,500 this month for putting on this trade. And the way it works is if the stock goes up, you make money. But if the stock stays flat, you still make money. And the stock goes down a little bit, you still make money. So what you've done is you've increased your probabilities greatly by learning how to use the right strategy that we teach to help you profit in any market condition. So this is called a spread trade. And the way it works is you're actually selling options and buying them at the same time, generating a profit for you right away. And you have a certain amount of time that it has to perform by either going up, stay flat, or go down a little bit, and then you keep the money. Now there is risk if it goes down too far, and then we teach you how to mitigate that as well. So even though you have a certain amount of risk, you'll know exactly where your exit is. You'll take that exit if it goes against you, but look at the probability if it can go up, sideways, or even down a little bit. You've taken a probability that would have been 33%, because obviously if you want the stock to go up and you're buying stock, the only way you make money is if it goes up. If it goes sideways or down, you lose money. So you have a 33% chance. With this options trade I just talked about, a spread, what happens if it goes up, you make money. If it stays flat, you make money. And it can go down even a little bit and you make money. So you've increased your probability to about 70, 80, even 90% we can show you to create probability trades where you're going to win most of the time. And when you lose, you're going to learn to mitigate that risk. So keep in mind, when people say options are risky, it's usually because they don't know what they're talking about, they've heard it from somebody else who didn't know what they were talking about, or they went out and gambled in the markets without proper education, they did not execute properly, and now they've lost money and they're blaming the option. What is risky is the lack of education. So I invite you to come and get proper education with the Market Mastery Group. Come join one of my 90-minute webinars. It's free. And at that point, you can learn a little bit more and find out if this resonates with you. And if it does, join us because we've helped thousands and thousands of people make money in the markets consistently. You just got to know the right information and be able to execute on it. So this is Vincent Dowd. Thanks for watching. I'll see you on one of the free webinars.